Welcome back to Midcap Radar. Well, let's shift focus to Enviro Infra Engineering. The company reported their Q4 numbers. Their consolidated revenue surged over 30%, while EBITDA rose 12% on a year-on-year basis. Manish Jain, who's the managing director at Enviro Infra Engineers, joins us now to discuss this and other things as far as FY26 outlook is concerned. Thank you so much for joining us, sir. First up, when we met last time around, you gave us a guidance of for FY25 to be slightly northwards of 1,000 crore. You've gone ahead and achieved that, almost a 5 to 6% beat as far as your own guidance was concerned. Now, going into FY26 with the order book in hand, what is it that you can guide the street towards in terms of top line, in terms of EBITDA, margins, as well as bottom line?
Good afternoon, and thanks a lot for having me on the show. I'm glad to inform that the numbers which we could foresee in our last meeting, we have been able to outdo those numbers. Our top line has been 1,066 crores. Our margins are still better because we had given a guidance of 22 to 24% EBITDA margins. We have been able to achieve EBITDA margins of more than 25%. And then our PAT margins are also better. These are at 16% plus. So the profitability is 177 crores for the entire financial year FY25. Going ahead, our order book present is 1,180 crores. We have bagged another 200 crore worth of orders in the current financial year. On the positive side, we have submitted bids for around 5,000 crore plus projects. So we are having a good success ratio of more than 40%. Still, if we see a conservative success ratio of around 20 to 25%, so we can have a good order inflow into the company. We foresee an order book of around 2,500 to 3,000 odd crore coming into the company in this current financial year. So on the basis of this new bids which we have submitted, the order inflow which we expect, we maintain the guidance of around 35 to 40 odd percentage growth in the company for the current financial year as well, along with the profitability margins that we peg at 22 to 24% EBITDA margins. So we maintain the same growth. I will continue with this.
Sure. And when we look at your margins, then you're expecting a much lower margin as compared to what you've posted this time around, right? Because this year you've managed to post 25% margins. So you're saying that will not sustain going forward?
No.
And what would be
our guidance for the margins have ever been 22 to 24%. We have been able to achieve those numbers, still better numbers in current financial year, and definitely we look forward to achieving similar type of margins in future as well. So the guidance factor that will always be in the range of 22 to 24% EBITDA margins. So this is how the efficiencies that get derived, we have been able to achieve still better what we can foresee.
Okay. The other thing we want to understand from you, Mr. Jain, is that especially when it comes to the water segment and a whole host of other players, have gone ahead and flagged off this particular concern, is the issue of receivables. We understand that you two currently are facing this particular issue. So what is the on-ground scenario? Are there worries, especially in terms of receivables that you're getting? And are there any delays when it comes to execution?
If you see the cash flow statement of the company, there has been a significant improvement. From a cash flow of minus 80 crore pre-tax of cash flow from operations, it has turned positive. And now we are around 25 crore cash flow positive, cash flow from operations pre-tax. So that says that there has been a substantial improvement and the cash flow position is substantially improved in the company. It is right that there has been some cash flow issues in the JJM projects in this current financial year. However, we were operating in other segments as well, wherein under Amrut 2 and Namami Gange, we were executing a number of projects. So we could fairly make up for the cash flow shortfall from the JJM projects. The cash flow position from JJM also improved in the month of January, February, March. So it has the cash flow position of the company, it has improved significantly. If I say there were some funds which were released on 4th or 5th of April, rather I will say these funds were to be released by 31st March. So these got delayed by maybe for 3-4 days. If we just complete these numbers, so you can just conclude that we are OCF positive. So that way we have been fairly comfortable. The funds flow have been comfortable in the company for all the projects wherein we were executing. And the similar condition seems to be there because government is proactive and the funds are getting released in the projects.
Right. Mr. Jain, very quickly, order inflow guidance, number one, private versus PSU, and number two, export opportunities, especially we understand you're looking at orders coming in from Saudi. Can you quantify it as well?
Basically, our order book currently is from the government projects, from the various government initiatives. It is basically under JJM, Amrut 2 and Namami Gange.
Right.
I give the order split right now under JJM. My current order book is around 175 odd crores. Rest of the projects are under Amrut and Namami Gange. So there the fund realization was better even in the last financial year. Now coming to these around 200 crore odd projects which we have backed in this current financial year, they are again these sewage treatment plants and one water treatment plant, which is around 70 crores. So that way our order book is more inclined towards the WWTP projects, which is sewage treatment plants and common effluent treatment plants. So going forward, we are the projects which we have submitted our bids. These are again more under this Amrut 2 and Namami Gange. We are not bidding in JJM. So the orders inflow are expected to be in the range of around 1,200 to 1,500 crore from our current bids which we have submitted. And going forward on a quarter-on-quarter basis, we can expect that yes, we can close this particular financial year with an additional order book of somewhere in the range of 2,500 to 3,000 odd crore.
Understood that. Lastly, unbilled revenues, we understand that was close to almost 25% of the total operating revenue. Where does that stand currently?
The overall unbilled revenue position in our books is 265 crores, and if I calculate in the number of days, it comes out to 91 days. So a guidance of somewhere around 90 days of the unbilled revenue, it can be there in the books, and I think we are pretty comfortable on this.
Sure. Thank you so much, Mr. Jain, for joining us and giving us some perspective on how your numbers were and what is the outlook going forward. So that was the management of Enviro Infra. As of now, the stock is trading with a gain of nearly 0.4%. But let's also focus in on some industrial stocks. GE Vernova, this stock, Vivek, has been doing exceptionally well throughout this week. In fact, this week itself, that stock is up almost 23%. Hitachi Energy also has managed to hit an all-time high. Week to date, it is up almost 10%. Other stocks that are moving around in trade include Kirloskar Oil as well as Transformers and Rectifiers India. But with that, that's all we have on this edition of Midcap Radar. Don't go anywhere because MF Corner comes up next.